Can anybody hear me? Hello. All right. Welcome back, everybody. It's Ed Ponsi, your FX educator, here for FX Street once again. Good to be here. Good to see you. Let's get started. One session only today. Let us begin. We're looking at Euro Yen. Yesterday, we wrapped up 3 trades that we set up last week. We wrapped up a moving average trade on Aussie Yen, where we were long, and we wrapped up trades on Pound US dollar and Euro US dollar as well. And now we have potential setup coming here on Euro Yen. And on Euro Yen, if you, I'll zoom in here. This is now trending lower, and you can see that there's a whole series of candles where Euro Yen hits this is the 20 period exponential moving average. The 20 exponential. And we hit that and we back off, and I see it happening. Here's a stretch of about 5 candles out of 6 in mid-February. And there's one here back in late January as well, where the price comes up approximately to that 20 period exponential moving average, touches it and drops. So this is what I would call, a precedent has been set. It sure looks to me, and look, could be a coincidence. Some things, not everything that happens in the markets has meaning. I think sometimes we have a tendency to attach meaning to things because as human beings, that's what we do. We want to, we try to create order from chaos. Sometimes the activity does have meaning, sometimes it does not. And there's really no way to tell, but it certainly appears as if somebody is buying when it hits the 20 period, selling when it hits the 20 period exponential moving average. That would certainly seem to be the case. So we will also sell when it hits the 20 period exponential moving average. You see, you and I can never be the whale. You and I can never be the person who moves the market, the person who stops it from rising when it reaches that moving average. You and I could never play that role. But we could mimic whoever it is that plays that role. You and I cannot cause the price to turn in the currency markets, but if we notice that somebody else is making the price turn, perhaps somebody out there is selling every time it hits that moving average, and we can do the same. We can sell when it hits the moving average. So that means we would be a seller today at 120.08, which is admittedly a long way off. 120.08 is right here. And the current value is 117.77. So look, that seems like it's a long way off, right? And you're thinking, oh, well, it's not even worth worrying about, right? Well, the price, but look over here. Right over here, the price is about certainly more than 100 pips away from the moving average. And what happens next? Next comes a whole series of opportunities to sell short against that moving average. So don't count it out. We simply don't know what is going to happen next. But I think we're seeing a turn in the trend. The trend was up, and now it's turning. We call this a rounded top. You can see it right there. Sort of a dome looking structure on euro yen. So this is one that we're going to have our eye on. And what I'll do is I'll put an order in, but I won't put it exactly at 120.08. I'll put it a little bit above 120.08. Maybe I'll put it at 120.18. You know why? Because if the price begins to move up, the moving average will rise a little bit. That's the 20-period EMA. But today's candle is one of the 20 candles that constructs that 20-period EMA. So if that candle turns green and begins to rise, that moving average is going to rise. So I will not put the order immediately on the moving average. I'll put it above the moving average just a bit. And we'll see what happens. If the order doesn't execute today, in other words, if the order does not execute within the next 9 hours, then the moving average is going to change, and I'll have to adjust the order accordingly. And entry, of course, requires patience on these trades, but if you were with us for the past week, we had one going on Aussie yen. The result was a loss of 17 pips, very tiny loss, but it had the potential to be a huge gain. And at one point, we were up 96 pips. And it could have been, potentially could have been a very, very big gain. And that's why we do these type of trades. These are the type of trades where you can hit it for 6 for my friends who like cricket. And, they tend to have small losses and large gains, and that's why we like them. So this setup is going in, and we'll follow it as necessary. Also, I'll need to place a stop. My ATR is 91 pips, so half of 91 is 45.5. Rounded up 46. My stop will be 46 pips above the entry point if we get executed today. So if I put my entry at 120.18, my stop will be 46 pips above that. I'll have that stop in place along with my entry order, place it, walk away, and go about your business. I'm going to go to the gym. I'm going to go for a long walk. I'll have my cell phone. I don't need to sit in front of the computer all day to do this trade. And, if I notice that the price is getting close, well, then I'll pay more attention and I'll probably get myself home. Frankly, I don't even have to get home. I could do everything from an app on my phone that I need to do. But, unless you're adept at using apps and things of that nature, it's better to be at home. But you don't have to be a prisoner to your computer. It's 2017, and it's certainly no longer necessary to be a prisoner to your computer. So that's one of the things I've got my eye on for today. We did pretty well with our setups on Thursday. We did we racked up all the scores yesterday. If you missed yesterday's session, please go back to the archives and check it out. It's all there for you. Today could be interesting. We have coming up in 15 minutes, US GDP. Expected that we grew at 2.1% in the fourth quarter. 2.1% is the expected number for the fourth quarter. You also have a speech from President Trump coming up in about an hour, 1 to 2 hours from now. I'm not sure about the exact time. Could be a market-moving speech. I think he's going to talk about the economy. We just don't know. The man's a wild card. What can I say, right? We have a lot of data coming out of the U.S. today. So 14 minutes, the big one, GDP. Wholesale inventories is not a market mover. PCE, personal consumption expenditures, that's watched very closely by the Fed. However, it's not a market mover in the short term. A couple of items coming out from Canada are not really market movers and are probably of little interest unless you're trading Canadian dollar right now. Nobody that I know pays any attention to the Red Book Index. Case-Shiller home prices could be a market mover potentially. Chicago PMI, potential market mover. That's an hour and a half from now. Consumer confidence, potential market mover. So we could see some activity from this, from Case-Shiller, PMI, and consumer confidence. Those are the three to watch outside of GDP. So we could see some fireworks today. I like a little bit of volatility myself. It always adds to the proceedings. Okay, let's get this off the chart. Let's see what else is going on out there. Now, so I've been flipping through these. Aussie is always something that we look at, and here's the daily. Now, we've been looking at the 20 period on Euro Yen was the chart we just had up. It's the 10 EMA that looks interesting on Aussie, but I wouldn't trade it. I wouldn't buy it here because look how it's flattening out. The 10 was clearly working here, right? Do you see how it's flat now? And if you go back, you see how it's in this area. I see how I drew this area. These are all failures. These are all price failures of Aussie. Aussie fails. And so let's just say it's a tough area for Aussie. And I'm not really surprised that Aussie's flattening out up here because it's just in an area where sellers tend to show up. So if you're in Aussie, just make sure that, I know that some of the traders in this room have made money, good money on Aussie. So it's not I'm not criticizing anyone. All I'm saying is just be aware of where you are on the chart. You could very well make it through this area, but just be aware of where you are, and know that it tends to be a tough spot. So just know that. Okay. All right. And Aussie's been really strong though lately. One of the stronger out there. Like I said, we just got out of Aussie Yen just the other day. Let's move on, right? And let's keep it moving. But Aussie, one of the stronger ones out there. One of the more interesting charts I noticed out there was this one. Swiss yen. Now, we just looked at Aussie yen, which was breaking down. Swiss yen is very similar. I'm going to take the moving average back to a 20. You know that the Swiss franc and the euro are very similar, so I wouldn't want to trade both of those at the same time. But this is not the same setup. This is not a moving average setup. There is no resistance on the 20 period or the 10 period EMA here. So I'm simply going to get rid of the moving average. This can be played in a completely different way. In other words, Euro Yen might never come back and hit that moving average. I have no idea. And Swiss Yen might never come back and hit this level, but this black line is very important. And let me explain why. I'll try to get it just right. I'm going to say that line is 112.15. Can you see all the resistance? I'm sorry, support, which should now become resistance. In fact, this goes back to early December, January, February, just very consistent, right? Very consistent support, and then it breaks very recently, like last week. And you can see little hints of resistance. The tops of these two candles top out at 112.15. That looks to me like a sell point. 112.15 looks to me like a sell point. And if it doesn't work, you just dump the trade. I mean, you don't hold on to it if it breaks through 112.15 and starts rolling away. You don't keep it. You could do this with a very tight stop. This could be done as a very low-risk trade. But I think it has decent potential. Let's get a little closer here. Right? So we understand that this line, I'll make it a dotted line here, is the key. 112.15 is the key. And that's resistance right now. It could also be used as an entry point. So let's make it green for entry, green for go. Now, right now, this is a daily chart. We don't have to trade this in this time frame. We could certainly change the time frame. But if I were to trade it on this time frame alone, I would be looking to put a stop above this high. Do you see how it's above 112.50? The high of this candle is 112.67. So call it 112.70. $112.70 for the stop. 112.15 for the entry. That's a 55 pip stop. Now, you can't do a trade with a 55 pip stop unless you have a target that is legitimately 3 times that amount. But look, here's what's great about this chart. Look at this rally. When the price moves up in a manner like this, it doesn't really create a lot of support and resistance levels. It really has a lot of room to run. I do see some potential trouble spots. I mean, this is very clearly a support level here. Right? But that's 100 pips away. Let's make that blue. It's above a round number, which I really like. And it's about 100 pips away. Yeah, call it 111.20. Okay. Now that's a 95 pip target. It's not quite 2 to 1. That's what the market's giving me, though. But the market's actually giving me potentially a lot more. Beyond that, if this breaks, it could just drop a long way down. Here's another area here. Look at this. That's about 110.43, so just move that up a bit and call it 110.50. Right, and 110.50, we could go to the 108.90s. Yeah, there's more targets farther down. But I'm just taking them as they come on the way down. I've got a target of 95, and I've got an additional target. It looks like of 165. This is this is not quite 2 to 1. This is 3 to 1. And there's more farther down. Carlos is saying, look, Ed, there's something down here around 108.90s. Now, Carlos is right. I'm going to drop a line right around here. Now, anytime, now he's right, there's an area in here. Now, anytime I see an area just below a round number, like 109, I'll push it above that round number. So I'll make it 109.05 or 109.010. Because I just like to be above the round numbers if I'm short with my targets. Because I can't tell you how many times I've seen the price hit a round number and then bounce. But there's that, and there's more. There's more farther down. I mean, this is like there's just so many targets to choose from here. This could be a monster. But you know, just keep in mind, if I do this one, then I can't really do the euro-yen setup from earlier. But you know what? I'm not worried about that. I can set them both up. And whichever one executes first, I'll take that one and cancel the other. Sound fair? And that's exactly, you know what I'm saying? I just won't take them both. And because they are very similar. If they're both, on both trades, I would be long the yen, for one thing. And the other problem is that the euro and the Swiss franc tend to mirror each other quite a bit. Because, well, Switzerland's located right in the middle of Europe, yeah, right? And that's part of the reasoning for that. GDP is moments away. Hey, who knows? Maybe GDP pushes this right up to our entry point. Wouldn't that be fun? Let's take a peek. Here come the numbers. Um, 1.9. Oh, do I wait till they both get to target price 1 or cancel? No, if one, I wouldn't wait until they both get to target price 1 because maybe neither of them gets to target price 1, right? They might both hit the stop. That's what I'm worried about. I just don't want them both to get stopped out, and because to me it's like placing two trades that are basically the same trade. So the only way I could do both of those trades at the same time, like my rule is that I can only risk 2% of my account on one trade. So if I did 1% of my account on Euro Yen, short Euro Yen, and 1% of my account on short Swiss Yen, then I could legitimately say, well, I'm only risking 2% of the account. But here's the thing. They might not both execute, right? So let's say I do that. Let's say I set them both up as 1% risk. Swiss Yen executes and Euro Yen doesn't execute. And now I've got a winner in, let's just say I have a winner in Swiss Yen, and I'm like, oh man, I should have just done 2% risk on Swiss Yen. And as soon as I got into Swiss Yen, cancel Euro Yen. And that's because I've done it both ways, and it seems to me that Swiss Yen has just based on proximity, Swiss Yen has a better chance to execute. Swiss Yen right now is like 50 pips from the entry, whereas Euro Yen is about 100 pips from the entry. So, you know, it's really possible that one might make it and the other not. Do you wait till they both? Yeah, no, I don't. If one hits the end, if one enters, I'll cancel the other. But you know, there's a lot of different ways it could be done. There's more targets on here too, if we wanted to talk about that too. I mean, there's stuff way down here. Like this is a target, right? Like, I mean, you might be in the trade for months, but if you think how happy you would be to be in this trade for months and hit that target, that would be awesome. You know, that would be tremendous. Just taking a peek around here. Yeah, short bias definitely on this because of the way this broke. I mean, that green line was support big time and just broke. And it has that look of a rounded top, and Euro Yen has that same look, but Euro Yen is hitting the 20 EMA, and Swiss Yen is not hitting any EMA that I can discern. But they do have a similar look. Even dollar yen looks like it wants to break. You look, it's still, look at that. Dollar yen even looks like it wants to go. And the dollar index, I think we're going to have to dismantle these head and shoulders things, man. I don't know if it wants to do it or not. It was kind of a predictive right shoulder there. I was kind of guessing. And so far, market not really cooperating. We don't want to be predictors. We want to be reactors, you know? Okay. How about Warren Buffett? Final thought. How about Warren Buffett coming out and saying he bought a ton of Apple? This is my kid's favorite chart. I have a 7-year-old who loves this chart. Cup, handle, cup, handle, explosion, all-time highs. Apparently Warren Buffett has bought 120 billion worth of Apple this year alone. This year begins right here. Thanks, Uncle Buff. Thank you. Thanks, Warren. For once, he helps me. He always buys stocks I couldn't care less about. For once, he helps me out. Thank you, Uncle Warren. Okay. I'm out of here, gang. I think I'm back tomorrow, though. I'll see you next month, which is tomorrow, if I'm not mistaken. Everybody have a great day. Take care.